Welcome to FreightWaves Today. I'm Craig Fuller here with Julie Vandekamp. Julie, how are you?
I'm good. It's Friday.
It is Friday. Man, it has been a long holiday week, post-holiday week, but not a lot of action in the freight market. It's kind of a boring week.
Yeah, I think it's a little bit of holiday hangover.
I think of the transactional side of the freight market, not a lot of activity. However, had some fantastic economic information. The railroads have done quite well. Just the overall reports that we've got in the first half of the year, real strong. The LMI was really strong. But in terms of like transactions, spot rates are, have maintained their highs. Tender rejections have cooled off just a bit, but really kind of a slow, this is the summer doldrums. This is the week where I think a lot of shippers had stacked some freight this week. Do you think we'll see things up or down next week?
I think July will be kind of the norm, sort of what we've been seeing.
What does that
personally
mean?
This new norm, right? I mean, we say tender rejections are down. 17% is not.
You think we're
a small
things will
number.
Be tight,
I think that we'll stay kind of where we've been at, and then we'll see when we get into August, and then I think when we get into September, we'll
it's
really see.
Labor
Hopefully
Day
more of
is
a
sort of the
peak.
next big catalyst for freight. It's really headed up to Labor Day, and then post Labor Day is really when that shipping season happens. But international container rates out of China are above $7,700 in terms of spot rates, which means
so that's up another $700 in a week.
Yeah, it's up 700, which is not unusual in the ocean container market. It shows when you have tight capacity that really there is, we've talked about this before, there is no ceiling. Shippers will pay whatever it takes to get freight moved. And ultimately, that's what matters. There were some headlines, which I'll get into later today, about the new emissions regulations, which is something that a lot of the OEMs have been waiting for. Fleets have been waiting, trying to figure out what they're going to do in terms of pre-buy and pre-purchase. We'll get into that later in the show. Also, we've had, Hormuz we're sort of flared up, although it looks like the president says they want to do a deal. What are your thoughts there?
I don't have thoughts till we really know. I mean, I think I'm sure this is more likely how it always goes, and we just don't hear it because we've not had a president before who's very gives us every single update and talks about every single thing that happens. But I guess I'll believe the deal when I see it. In the meantime, I wouldn't put all of my eggs in that Hormuz basket. I would make sure I had other options. Certainly for the short term, but I think even for the long term, as we talked about earlier this week, having multiple options is the right move.
Well, we did hear from the UAE as they're building alternatives, and that's important. Unfortunately, some countries and some energy sources just have to transverse the Hormuz, and so there's not a whole lot of options. But as you point out, using alternatives, American energy, the Americas remains a fantastic place to source energy and petrochemicals. Let's get into the headlines for the day.
We kick things off with a major intermodal provider emerging from bankruptcy just as the market enters a hot streak. STG Logistics announced Thursday that it has completed a financial restructuring, reducing its total funded debt by approximately 90%. The Dublin, Ohio-based company entered a prepackaged Chapter 11 agreement in January and emerges with new ownership, a leaner balance sheet, and $150 million in new capital from a group of investors including Fortress, Fidelity, and Invesco. The timing couldn't be better. An exodus of truckload capacity driven by regulatory crackdowns on non-compliant drivers has triggered a surge in truckload spot rates. Combined with a run-up in diesel fuel prices due to conflict in the Middle East, these factors drove an 8% year-over-year increase in total intermodal traffic on U.S. Class 1 railroads during the second quarter. Intermodal is currently 31% cheaper than full over-the-road truckload service, significantly above the 15% cost savings threshold, typically required to spark modal conversion. Over in the legal arena, a massive wrongful death verdict is sending shockwaves through the truckload sector. An El Paso jury has awarded $104 million in a wrongful death lawsuit against Mesilla Valley Transportation and one of its drivers. Jurors found that MVT driver and company trainer Juan Garcia fell asleep while driving a tractor trailer on Interstate 40 in Sequoia County, Oklahoma, causing the truck to drift onto the shoulder and strike a parked box truck displaying emergency flashers. Co-driver Orlando Robles, who was asleep in the tractor's sleeper berth, was killed in the 2020 collision. The jury awarded Robles' son $7.5 million in punitive damages for the loss of his father, with the overall verdict totaling $104 million for the surviving family. Mesilla Valley Transportation, headquartered in Las Cruces, New Mexico, is one of the largest privately owned truckload carriers in the U.S., operating a fleet with over 1,600 trucks and 5,000 plus trailers. Finally, the U.S. Postal Service is finding out the hard way that minimum volume commitments can completely derail a cost-cutting strategy. According to the agency's watchdog organization, postal officials failed to align the UPS air cargo contract with projections for declining parcel volumes and a new strategy that prioritizes use of motor carriers over more expensive air shipping. To avoid significant penalties for failing to meet minimum volume thresholds, the National Post handed UPS more first-class mail and marketing mail. The percentage of first-class mail with a 3 to 5 day delivery window traveling by air went from just 2% in October 2024, when the UPS contract took full effect, to a massive 50% by March 2025. The Postal Service even began moving marketing mail, flyers, brochures, fundraising letters, by air beginning in March 2025, a product historically transported by truck. If the USPS didn't supplement package volumes with mail, it would have paid an extra $127 million for unused air capacity, demonstrating the painful bind minimum volume agreements can create.
The Postal Service has got its work cut out. Eric Kulish from FreightWaves has reported just the financial situation for the U.S. Postal Service. Someone who, we have magazines that we put through our business for a lot of these brands. We're dependent upon the Postal Service, and unfortunately, we're a price taker. We don't get a lot of power over that, but the Postal Service has, like a squirt cut out just to really manage its financials.
Well, yeah. So is this something that a contract that gets renegotiated and corrected, and some of this volume goes back to truck? Or is this something that they're just trapped in?
I think the Postal Service, it's got, there's so many constraints in the Postal Service. They have the union contracts, these long-term transportation relation contracts, these volume contracts, these capacity contracts. But ultimately, it's the pension that really, and the fact that every U.S. address is required, under federal law, the Postal Service has to deliver to all those addresses. And so I don't know what's going to happen in the next couple of years. Congress is going to have to do something. I don't think we'll see it spin off. It has been spun off in, Germany. Deutsche Post is the German post office. Japan, it's been spun off. Actually, they're the leading banking. The Postal Service in Japan also runs an entire bank, and it's very successful. I don't know what happens with the U.S. Postal Service. Our geography is quite different than Germany and Japan because of just the vastness of America. They still have to deliver mail to remote parts of Alaska, Hawaii, Guam. It's still required, and that creates a huge tax on the U.S. Postal Service. So hopefully they'll figure it out, and hopefully they don't continue to raise, I suspect they will, continue to raise postal rates, because it's very expensive as someone who has no choice but to take it. When we're sending out magazines for subscriptions, we just end up taking it. I do want to talk about this nuclear lawsuit.
Yes.
It's a huge huge award, jury award, over $100 million. We've talked about how big that is, the potential that's getting bigger, and frankly, the potential for freight brokers to end up paying it under Post-Montgomery.
Yeah, and I don't know if you and Matt will talk about that later today, but more in detail. I hate this all around. Obviously, you hate this for the driver, the trainer,
the family,
who.
Yeah.
Well, I hate it for the driver who was killed and his family. I hate it for the driver who was driving and made a mistake, obviously a fatal one. And I hate it that it has reached this level that it's such a nuclear verdict. $104 million.
$100 million is one of the largest jury nuclear awards in trucking history.
And I guess it's done to send a message, right? I mean, obviously no dollar amount can offset the loss of life, but also $104 million versus another $1 million number is not necessarily going to be meaningful change for his family or bring him back, right? But this is transformative for this organization, I'm sure, for this company. And
Mesilla Valley, 1,600 trucks, probably on the order of $250 million in revenue. You're talking about the fact that most trucking companies, and we've been a private company, we don't know the financials of the company. But let's say if they're
operating in the 80s for an OR, which would be great.
if they're operating the 80s, it means that they're pulling in 50 million a year. It's a couple of years of operating, not to mention the debt. I doubt very few trucking companies have been operating in the 80s. But to your point, I mean, there's not a lot of companies, and my suspicion is that they probably have $100 million of insurance. And the insurance pays us out, but then we look at it's just driving insurance rates for everybody. It's a story that's going to we're going to keep telling, because now with Montgomery and that liability shift happening even greater. There was an article earlier this week that we posted, which was about the leasers, the Penske's, the Riders. Rob Carpenter posted it, may end up also being drug in. It's actually easier to justify that they are, particularly when it comes to maintenance.
They own the equipment, right?
They own the equipment. It may be easier to pull them into these lawsuits than it is even the brokers. And so lots going on. We'll never, unfortunately, we never run out of things to talk about when it comes to liability. Let's bring in our first guest. We have Lee Klaskow. He is the Senior Transportation Analyst at Bloomberg Intelligence. Lee, how are you doing, sir?
I'm doing fantastic. How are you?
Doing great. So lots to talk about. This is probably the most interesting market, certainly since FreightWaves has been around the last 10 years, and certainly since I've been around freight my whole life. But what are your thoughts? I mean, you're covering it from Bloomberg's perspective. What are your thoughts on sort of the current state of the market?
Yeah, so at Bloomberg Intelligence, we cover all modes of transportation. So whether it's on the road, the rail, the air, or the ocean. To your point, it's been a pretty exciting time to be in this space, especially since the pandemic. It's nice to have people interested in your markets, and the interest right now is obviously being driven. You mentioned it a couple of times on the truckload market. You're seeing a real tightening of capacity. A lot of federal mandates happening that's pushing out some capacity that we view as a structural change. So the kind of boom and bust cycles of the past are probably going to be elongated, meaning that the highs will be higher for longer and the lows will be lower for longer. And right now it just seems that capacity is coming out, and there's a real optimistic sense about what's going on. If you even look at the markets, truckload stocks and LTL stocks are up around 50%. That's compared to the broader S&P, which is up around 10%. And there's a lot of optimism. We do a quarterly survey with TruckStop where we poll a bunch of owner operators, and they still remain pretty optimistic. They're a slightly less bullish, but I wouldn't call it bearish or anything negative. They're just not as excited as they were 3 months ago. But most of them are feeling that rates will continue to climb. And we also, with TruckStop, do a semi-annual survey of brokers, and brokers are extremely optimistic right now when it comes to rates, volume, and their gross margins.
Leah, do you think that the owner-operator concerns is related to fuel? Is it just because there was such relief over the last 6 months? And look, we're all momentum-driven, and we want it to continue to go. Do you think that's what caused some of the owner-operators to not be as bullish as perhaps they were a couple months ago?
Yeah, I think definitely diesel has comes into play. Obviously, since the war in between the U.S. and Iran started in late February, oil surged to a high, I believe, $115. Now we're still above pre-war levels, but only by a couple bucks. Obviously, the announcement by the Trump administration this morning could put some more pressure on oil. And we would say, we were mentioning earlier that the owner operators are less optimistic. It's really that they think that rates are probably, more of them think that rates are going to be flat versus, obviously rates coming down. So, and to your point, fuel will definitely come into play with that, because as they're spending more on fuel, it hits them and their margins as well. As you were talking earlier, a lot of these folks have very razor thin margins.
Yeah, I mean, look, I think the spot market, we've covered it this week and last couple of weeks, spot market is near all-time highs. The difference, though, is that the momentum we saw in May has slowed down. We're not seeing continuation. We thought that we would continue to see it through the July 4th weekend, but it really sort of has, has sort of peaked and cooled off a bit. it's going to be interesting to watch. But I think contract rates are definitely going up. And I don't know what your current projections are in terms of truckload contract rates, but we're expecting it to go up, double digits between now and the end of the year.
Yeah, so when you take the average of the contract rates, we did our mid-year outlook a couple weeks ago, and we were out that we think contract rates are going to be up mid to high single digits. Obviously, the further you go into the year, those could equate to double-digit returns because we're taking the average. So I would totally agree with what you're saying about contract rates. And it's really, that's really going to be driving earnings growth. We're coming up on 2Q earnings season, which is always an exciting time as an analyst. You get to go on to a lot of conference calls and listen to management talk about their business and the outlook. And expectations are pretty high, I'd say, in the second quarter for both the truckload and less than truckload space. Rails, it's probably more about how they're operating and they're kind of talking their book, whether they're for or against the merger between UP and NS. Obviously, UP and NS are for it. Its peers mostly are against it. So there's going to be a lot of conversations about that.
Yeah, we had both IANA's president on this week, as well as the American Association of Railroads, the AAR, CEO this week. And we were told in order to get them on our show that we couldn't ask about the merger because they wouldn't answer it, which I think we understood why. I mean, nobody wants to get in the middle of that, particularly when this is such a hot topic if you're for it or against it. Lee, overnight or yesterday, the NOx emissions were released by the EPA. Everyone's been waiting on this. There's a conversation about pre-buy purchasing. Is this going to see, are we going to see a substantial fleet expansion? Your thoughts there?
Honestly, I don't have much to say about that. What I will say is that, it will have a positive knock-on effect on the used market. And so a lot of the trucking companies, when equipment rates are more expensive, and they're more expensive in the aftermarket, that usually gooses earnings per share. And so as those prices start to increase, that could be a pleasant surprise to earnings. We're not talking about there's going to goose earnings by 10, 20%. We're talking about like mid-single digit probably benefits. So that's a net positive. In terms of a pre-buy, the large fleets that I cover, like, the JB Hunts, the Knight Swifts, and the Warners of the world, they're going to do what they always do. They have a kind of a formula in place where, they don't want the average age of their fleet to go over a certain number because it gets more expensive to maintain that. So, on the margins, will they pre-buy? Maybe. I think that's a great question for at Bloomberg Intelligence. We have someone that covers that space, Chris Ciolito. You should have him on a guest. I think he can provide a lot more insight than me.
That's great. We'll have to invite him. I'd love to hear the take of this. There's been some folks, and I'll talk about it in my Sonar update, that have believed that Cummins actually wanted the regulation to stay in place to drive the pre-purchase, sort of gives them a one-time pop. But there's also folks that have said that's not true. So we'll see. Regardless,
yeah, and also they spent a lot.
Administration did not do a significant change, at least on the NOx side of it. So something to watch. But to your point, I think the fleets have been pretty disciplined this cycle. Look, coming off the Great Freight Recession and it being so dire, not a lot of fleets have the balance sheet to go out and expand.
Yeah, and I would also say a lot of the OEMs invested a lot of money in these new technologies, and they want to see a return on those investments to get the NOx and SOx down to the levels that the EPA was mandating earlier.
Yep, for sure.
So we're talking about, after this long recession, finally truckload earnings beginning to grow. That primarily coming out of an improved market based on capacity leaving, not necessarily demand picking up. And we talked earlier today about some liability. So let's talk about some of the regulation and your thoughts on the Montgomery case and how that's accelerating carrier and broker exits, as well as some of the pressures on capacity from non-domiciled CDLs and ELP proficiency standards.
Yeah, so I think at the end of the day, it's going to make the industry, whether it's the trucking industry or the brokerage industry, a better, safer industry. I think it's going to take out a lot of quote unquote bad capacity, and it's going to make being competitive within the brokerage industry a lot harder, and that could spur on a lot of consolidation. So obviously, it could impact a lot of good brokers out there, and they may need scale to be able to handle kind of the additional costs that the Montgomery case will obviously bring on. So we see it as a kind of accelerator in the consolidation of the freight brokerage industry, and we also see it as a lot of bad actors in the truckload market just going away and not really being able to come back, and that kind of fuels the earlier comments that I made at the beginning about how this is really probably more of a structural change than kind of just a cyclical change.
So speaking of the capacity exits, and we agree that it's structural, how significant do you think that impact is?
In the truckload market or the brokerage market or both?
Both.
Significant, because it's just going to keep, like I mentioned earlier, it's going to keep the cycle, it's going to keep the highs for high longer and the lows low longer. There's a lot of capacity, whether it's English language proficiencies, whether it's getting rid of the truck driver mill schools that are just pushing out drivers that really weren't had the skills or the capabilities to be on the road. These are all good things, because we obviously we don't want to see accidents, and we certainly don't want to see fatal accidents, whether it's the trucker's fault or the general public's fault. It's these things. If we can try to prevent these by making the roads safer, by increasing the standards at which drivers need to be in the market, I think that's a good thing.
So
And
Lee,
and also it's going to obviously have an impact on insurance and cost, and that's why scale is going to matter, whether you're a freight broker or a truckload carrier.
So Lee, you've mentioned that the truckload stocks are on fire. They're up 50% versus the S&P up 10%. A lot of people who look at that on Wall Street, and I know you're much closer to Wall Street than even we are, is they look at it and say, how can a company like Knight-Swift be trading at 360 times earnings without understanding the cycle? How much more interest are you getting from hedge funds, from the Bloomberg community, the Bloomberg audience, the Bloomberg customer base about freight as an investable asset today than where you were before?
Right. So at the end of the day, the trucking industry has really, especially the truckload industry, has been more of a trading mechanism for a lot of people, especially the hedge fund community. Obviously, long only money will come in and they'll buy and they'll hold and they'll keep it for a long time for whatever the reason. There are, we don't do buy, hold, sell recommendations here at Bloomberg Intelligence, but there are a lot of concerns, I think, about valuation and whether they are warranted. Truckload carriers are just kind of riding that wave, and I guess the hope for investors, at least if you're new money, is you're hoping that the E catches up with the P and then brings those multiples to a more normal level, and so that's, I would say that what the outlook would be when people are looking at the earnings picture. I mean, the end of the day, earnings, are expected in the second quarter for the truckload and less than truckload market to be up 26 to 30% on average for the publicly traded carriers. That's expected to accelerate as throughout the year. And it could be as high as 80% next year. So people are expecting significant earnings, because I don't need to tell you guys, but earnings have been so depressed over the last 3 or 4 years because of the freight recession and rates that were just terrible, to put it bluntly. And now they're finally able to generate better returns on investments. They're able to generate better margins. And we're not talking about historically high margins. We're just talking about improving margins. And if the truckload cycle is longer, like I've been saying earlier, this could provide a lot more, runway for earnings growth beyond the typical, 18 month to 2 year cycle.
Yeah, we've made the case that this could be a trucking super cycle that happens, which, to your point, goes on for many years. So much operating leverage in these businesses, higher rates, higher volume. They just have such operating leverage. If this cycle does go on for a couple of years, which companies are the best positioned to take advantage of a elongated cycle?
I honestly, I think all of them. Each company has their individual stories align with them, but broadly speaking, a rising tide's going to lift all ships here. Um, you know, you, we keep on talking about the impact for these federal mandates. And the court case, the scope, the Montgomery court case. At the end of the day, if you have capacity, you are going to be at an advantage. And all these trucking companies, while they lean on owner operators for flex capacity, they still have that capacity in hand. And as rates are going up, it could benefit the ones that are playing in intermodal. Obviously, JB Hunt is like the largest player. That also is a trucking company. Some of the other players would benefit as well, but they're obviously a lot less exposed, at least directly, to the intermodal markets. Then you have, we think that, while you've seen companies like FedEx kind of focus on their core business, like a parcel business, we do believe that there's value in these large companies with different businesses, whether we're talking about a JB Hunt, a Schneider, or a Knight Swift, with Knight Swift building out their LTL business. I think for the longer term, I think those companies are probably going to be best positioned because they're going to be, less impacted maybe in the cyclical downturn when it comes. And as you know, it will come, maybe not anytime soon, but, as the old adage goes, what goes up must come down.
This is an industry that is brutal and humbling. And look, we've talked about super cycles since I was born into this business. And so you have to remind yourself that you can get excited on these up cycles, but inevitably, to your point, Lee, is they always come. The Grim Reaper always comes back and sort of gets his pound of flesh. In this industry, it happens every single cycle. It is, JB Hunt's going to report next week. We're going to have a JB Hunt executive on the show, so we'll hear their take on the market. I always love the fact that JB Hunt goes first because they have such a diversified business model and they sort of see all sides of it, and it really sets a tone for the rest of the quarters. But the one that I think in terms of truckload that really probably tells us more about the cycle is Knight Swift, because it's the largest and probably has the most exposure to the overall truckload market. Julie, you worked for a period of time at Knight Swift. U.S. Express is a division. They have not enjoyed the earnings opportunity for U.S. Express as part of that business. Any thoughts there? You're going to keep your mouth. You're going to keep quiet.
Okay. Be a little careful. I imagine it's going to be a good quarter.
It should be. I mean, this is really it's the first opportunity they've had to really enjoy the market cycle with that asset since they purchased it.
Yeah.
They purchased it.
It's great OTR. It's a great OTR environment right now. They purchased a massive OTR company with a profitable dedicated business. So I imagine they'll be in good shape. Yeah.
Lee, any thoughts on the overall? Who do you think is going to perform well? Who do you think is going to be challenged? What part of the market's going to be challenged?
So to your Knight Swift comments, obviously, they have really done a good job at acquiring undervalued, underperforming assets and getting the most out of them, whether it's the Swift business that they, merged with. And, obviously it was the Knight management that was really in the driver's seat, if you will. And I think the same thing's going to happen with U.S. Express. I think you bring out a great point. It's kind of the benefits of that acquisition really haven't been felt because at the end of the day, we were at a really terrible freight environment. And so, they have access to all this capacity. And, with their sophistication, I think, it's very hard not to do a lot better in this environment with the U.S. Express business. And they also have the LTL business, which they're growing into. Their plan was through acquisitions to create a national network. They're pretty much there. The more that their network reaches people, the more share opportunities that they're going to have. And I think that's going to be a very interesting company to watch, especially given their disciplined pricing and cost control management.
Yeah, it's going to be interesting to watch. I'm looking forward to seeing how that business is performing. It's, it had that solo OTR business, which was the plague of U.S. Express's existence, is something that potentially Knight Swift can really turn around and hopefully see. And they have made some progress since they've owned that business. So We'll pay attention next couple of weeks. Lee, would love to have you back.
I know, I wish we had more time. We didn't even get to talk about ocean, so hopefully we'll have you back very soon.
So much to talk about. Lee is a fantastic resource. What's great about Lee is he is able to talk as a resource without the typical Reg FD stuff that most professional investor analysts have to go through. So we'll be right back with FreightWaves Today. We're going to talk about another major transaction in freight. It is the
Trimble.
Thank you.
We're going to talk about the Trimble transaction, and we're going to give you an update on the Sonar data. We'll be right back.
It's National Safety Month, which makes this a great time to ask how your fleet can prevent more accidents. Samsara AI detects risks in real time, giving teams more visibility into what's happening on the road and more context to coach drivers before risky moments become incidents. Fleets using Samsara Complete AI Safety Solution have reduced crash rates by nearly 75%. See the data behind the results in the Samsara Safety Report at samsara.com/freightwaves.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half. And then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
All right, welcome back. We are going to dive into the Sonar data with Craig's Sonar Update.
Long-anticipated rule from the federal government for NOx emissions has come to pass. We finally have a final decision in terms of rulemaking. A 470-page document was issued by the EPA yesterday, which is going to govern what the OEMs and the engine manufacturers will be releasing next year in terms of their NOx requirements. Now, this is something that the Biden administration originally proposed in 2023, and the Trump administration was expected to release guidance. There's been some delays, and that's been causing some pressure and stress for the overall market, as well as pressure and stress for OEMs and the engine manufacturers with some uncertainty as to what the government would end up doing. Now, for those that have been wanting tighter NOx standards, it largely keeps the Biden proposal in place. There's expected to be a 90% reduction in NOx coming out of 2027 engines, and something that will make those engines more expensive. New truck costs are expected to go up anywhere from $8,000 to $25,000 per truck. But when you get lower emissions and lower NOx, there is a benefit to public health and lower smog that will show up in cities. And therefore, the trade-off, as the government looks at it, is worth the cost. Now, fleets do respond to this. Fleets, as we've seen in past cycles where there has been new emission standards, fleets do go out and pre-buy trucks to avoid the higher tax or the higher penalty or higher cost associated with new trucks that meet these NOx standards. Now, we look at the history of this. First NOx standard and new emissions requirements came out in 2004. Then we had another standard that was originally issued in 2007 and finalized in 2010. And this is the first major update since 2010. But we saw in both of those periods big pre-buy and pre-purchasing to prepare for higher cost, and the expectations is that it will continue into next year. Now, the OEMs and the engine manufacturers have been preparing for this rule, and it was largely viewed that they wanted these rules in place, largely with some modifications, but largely because it would be a catalyst for new purchases of new engines and would create tighter restrictions on what trucks could be out in the market. This catalyst that they enjoy due to the higher price tag is something that they've been wanting because of the slowdown in truck purchases and engine purchases during the Great Freight Recession. So what is interesting about this is the engine manufacturers, particularly Cummins, have been talking about the fact that they expected this rule to go into effect and telling fleets to go ahead and pre-buy and pre-purchase so that they would avoid the 2027 new emissions standards and price tag associated with it. Now, one thing that we've been watching and been talking about is, does this create a surge of capacity in the market? And the answer is no. The capacity constraint is not truck orders. This is an old school way of looking at capacity, is looking at total truck orders and then sort of talking about how much capacity is out in the market. The new capacity constraint, and frankly has always been the capacity constraint, is the driver population. And ultimately, with the compliance crackdown that's taking place across the government and continuing to take place, there is no expectations that this pre-buy and pre-surge of overall engine purchases or truck purchases is going to drive any level of significant increase in overall capacity. So the concerns that this somehow would be a real drag on the overall freight market health is just unfounded, because the fleets that are buying these trucks are unlikely hiring drivers or bringing on drivers that don't meet the compliance standards that are now expected under the federal government or, frankly, state government CDL issuance. So really, this is a non-event as it relates to the freight market, but it will increase demand for new truck orders in 2026 before these rules go into effect, and it will be a catalyst as we head into later this year. Now, what we're looking at ultimately is this freight market continues to stay incredibly tight. Rejections still are above 16%. Now, this week is a softer week. Anytime after the July 4th period, you do have some softness. We have talked to a number of brokers that said shippers did hold a lot of freight from last week and didn't ship it out, and some of that is returning, some of that's happening. But really, when we look at the overall freight market, capacity remains tight. Freight rates, spot rates are near all-time highs. We've talked about the fact that contract rates are expected to continue to go up. There's been some reports from Wall Street that some of the private fleets are seeing high demand and seeing surges in overall freight demand. And this is all positive signs as we head into the second half and continue to focus on overall tight market conditions, that's really going to be priced into overall freight. Shippers need to prepare. We've talked about this continuously all week and over the last couple of weeks. Shippers need to prepare for tighter capacity, higher rates. It's definitely coming, and there's nothing to suggest that the market is slowing down.
So interesting take. Talk about something a little different today. Obviously, tender rejections stay high. So what does this EPA requirement actually mean? We don't know if Cummins will pull, if they'll come. We don't know if people will pre-order the 2026 models.
I've been told that pre-orders are a factor, but they're not as big as most of the fleets just don't have the balance sheet. I talked to Steve Tam at ACT Research after I did that morning update, my center update, and said, look, there isn't a whole lot of signs of pre-purchasing. He actually disagreed with my source that said that some of the OEMs and some of the Cummins specifically wanted as a catalyst. He said he didn't believe that was the case, that there was a desire to for the Trump administration to keep this in place. Look, it is interesting. We're seeing a 90% reduction in NOx. This is the first EPA regulation since 2010. And it's interesting that the Trump administration kept that reduction in place. But look, if you look at the health, I don't know if you've ever been over to Asia or in other parts of the world that doesn't have strong emission standards, you start to appreciate some of that when I lived in Hong Kong for a bit and spent some time traveling throughout China. It doesn't have strong emission standards and air pollution controls. They've certainly improved that. Once you start to breathe some of the soot in and you walk in the city, you kind of feel like, okay, I kind of appreciate this.
Two quick comments. One, this is one that I wish Max was here today to talk about.
He knows a lot more about this than I do.
This would have been his jam, and I remember even like 10, 15, 20 years ago, our trucks, the air going out was cleaner than the air going in, and that was something that our shop techs were really excited about. But I think the part we haven't thought about and talked about is you talked about driver recruiting, and if trucks don't matter if you don't have drivers, but also if you don't have shop techs that are trained on this new technology to maintain them, whatever these new engines are, and that is an incredibly hard thing to hire as well. So it'll be interesting to watch.
Shop techs, who's going to talk about that? Today on Freight Expectations, there's nobody better than Matt Leffler, so we'll hear from him. Stay with us. We're going to talk about Trimble right back.
This segment is brought to you by Descartes. The best supply chains aren't just faster, they're more connected. That's why leading companies rely on Descartes' global logistics network to connect, collaborate, and move freight with greater visibility and confidence. Powered by innovation and AI, Descartes helps businesses deliver smarter, uniting the people and technology that move the world. Learn more at Descartes.com. You ever see yourself short on trailers right when demand picks up? Our friends at Premier Trailer Leasing can help you stay ready. With more than 70,000 trailers and over 40,000, trailers with 40 locations nationwide, Premier gives businesses flexible access to dry vans, reefers, flatbeds, and chassis when plans change. They're known for transparent pricing, quality equipment, and 24/7 in-house road care support. So you can get more than just trailers. You can get a partner that helps with your operation and keeping it moving. Visit them right now at premiertrailerleasing.com to get set up before your next big search.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. These people operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the FreightWaves Playbook. Become part of the 1%. Sign up for FreightWaves Playbook today.
There was a report earlier this week that Trimble is planning to sell off its transportation division. And for us to really break it down today, we have the perfect guest. Bart, welcome to FreightWaves Today. How are you, sir?
Uh-oh. Do we not have audio?
So is that on my end, or is that, I don't know if we've lost Bart's audio.
Okay. All right, so Bart's working on his audio.
Yeah. So, Julie, this report that Trimble's selling off their transportation business. Oh. Hey, Bart, can you hear us?
I can hear you. Can you hear me?
Oh, good. Yes. It's been, we're great. So Bart, tell us about Trimble's a bunch of acquisitions, rolled their transportation business in. They recently bought Transporion a couple of years ago. Really big transaction. It was a $2 billion transaction. What are your thoughts? I mean, you were at Gartner. You saw all the transportation TMS providers, as well as all the technology that is out there. What are your thoughts on this report?
Yeah, I was even working with Trimble before Gartner, right? When I was at PepsiCo, and we were using PeopleNet as our telematics business. And if you look when Trimble really started their transportation division, the nature of it was mainly based around carriers, and then obviously with other acquisitions like TMW, carriers, and brokers. Then they started getting into the shipper side with the acquisition originally of 10-4. That was followed by the acquisition of Cubics and then Transporion. And obviously, there's a couple of things that you have to take into consideration. One is that the carrier world and the shipper world are quite different. That's why not a lot of companies attempt to do both. That's a big challenge that has a lot of implication even on the architecture of the technology. And the second part is when you look at the Transporion acquisition, as you rightly said, it was a huge acquisition. It came in 2023, right at the time where in Europe, the manufacturing industry was starting to feel the pressures. And also when in the transportation industry, we started to see that change and really the start of the recession there as well. So the timing wasn't the best. Obviously, they didn't know that in advance. And as a result, we've seen, obviously the market slowing down a little bit in acquisitions of TMS. Say the other part, which is difficult, Transporion was always a huge and really successful European asset, but it was always very difficult to implement European TMS in the North American market. And so that growth might have not been there of what was expected and what was promised to investors.
Yeah, Transporion really was bringing in a lot of technologies that really in the United States, they're all sort of bespoke. We have a number of not only point solutions, but a number of platforms that sort of provide pieces of what Transporion did. Transporion's business model is really to do sort of a single platform to provide lots of things from visibility, TMS, payments, all of the sort of things that really make up the Transporion business quite different. They've been, challenged to move that business into the United States. To your point, I think that's been a real struggle for them.
Yeah, you're right. I mean, North America is still by far the largest market for transportation technology, but it's also the busiest market with the most competitors. And if you have companies that have been doing this for over 3 decades, right, with Oracle, with, Blue Yonder and many other companies, it's very difficult. We've not just seen that with Transporion, Alpega, previously Transwide had the same issues when they were coming to North America. Big market, big opportunities, but, Americans like to go with the companies that have their networks here. And I would say technology in the meantime has changed. So it's no longer just about the technology. So it's not just transposing European technology in North America or vice versa, North American technology company in Europe. But do you also then have that local carrier network that's connected to that TMS as well as the data to make really a modern TMS work the way it should?
So Bart, over the last 15 years, Trimble has acquired all of these companies. They've built up this large transportation unit. So what does unwinding it say about the current transportation tech market right now?
I'm not sure if it's saying that much about the tech industry because we still see a lot of growth. I think the tech is maybe changing a little bit, but I think it says more about the fact that that transportation division maybe wasn't the best fit for the Trimble original business. If you look at their core business, which is engineering and agriculture and construction and geospatial technologies, where they started and where they had really a clear leader position in that market. You know, it's a little bit harder with transportation, and especially when you see what happened in the transportation industry and some of the challenges we've had the last few years, where investment has slowed down because cash flow issues with carriers, even with brokers, with many companies going out of business, and even with shippers, right? A lot of times not saying no to technology investments, but kind of pushing that out. It's always the answer of not now, let's do it later. And that's really been a slowdown of certain technologies, such as TMSs, especially if there's a lift and shift involved. And we see that technology evolve from these larger projects that traditionally took 9 to 12 months for large corporations up to 2 years or even longer, where companies now want to go with technology solutions that they can implement quickly. And a lot of that is, you guys know it as well, with Sonar, it's based around data and networks and creating value very quickly.
Bart, it's interesting because a year ago, or a couple years ago, Trimble spun off its telematics business, the old PeopleNet business, as you mentioned, into Platform Science, and now they're a minority shareholder of the Platform Science telematics business. Was that a foretell of what's likely to happen as they started to de-lever and de-platform some of these businesses? Was that really telling us what we would see, or is your read something different there? I know they were trying to unlock an enormous amount of value that they felt that they were not getting credit for their telematics business. But was this really a sign of things to come?
Not sure, because for me, to be honest, it was a bit of a surprise because PeopleNet, having been a customer of PeopleNet at PepsiCo, it was actually one of their strongest assets. So it came a bit of a surprise to me when they sold that part off, especially because a big part of Trimble's business is based around asset and tracking, which I think for the overall business is a better fit than the shipper side, right? So Trimble is very well known in companies that have assets. But if you go to the shipper world, we saw that when I was still, as you mentioned, with Gartner, and they became a sponsor for the first time, that Trimble name was not a household name in the shipper industry. No one knew what that was. And so they had to build that up. So keeping, or divesting the carrier part with telematics and the fleet part, but then keeping on the shipper side and then heavily investing in that with Transporion, that obviously was a different direction, which I think was a little bit more risky. And then if you actually see what happened in the industry for the last couple of years with a huge investment with huge depth to that, and now with their stock price, and again, I'm not a financial analyst, but you don't have to be a financial analyst to see that if you're going from a stock price a few years ago that was close to $100 to now just barely above 50, that something needs to happen. And I think for public companies, unfortunately, the market and analysts look at that negatively when you spread yourself too thin across many different industries. So I think it's more of a let's go back to what we're really good at, what we're known for, and build that business up in maybe less risky industries.
Yeah, it's interesting because they've got the huge construction business, the agriculture business, which is really the lifeblood of I think what really the industries that they have substantial market share. Trucking is more fragmented than those industries. And to your point, they've got an enormously large footprint. I think something like 65% of all assets on the road in the truckload sector have a Trimble product. A lot of it is the MAPS product.
Yeah.
They're known for their, if you've been around asset-based trucking, they're known for their big TMSs, TMW, Maddox, innovative, sort of this big set of businesses. My co-founder at Sonar sold his business IDSC to TMW that then became Trimble. So it's a fantastic enterprise, very large enterprise, and just an important company in our space that we're obviously going to watch. I do think the Transporion business is quite interesting because I think given a couple more years of evolution with AI, they have the potential to do a lot of unlock of value as, perhaps it's under new ownership, Art.
Yeah, I completely agree, right? What was always very interesting with the Transporion asset is that they started really by building a carrier network and providing solutions for the carriers and then bring the shippers on board. But what they had underneath it was that carrier network. Even other TMSs were using the Transporion European network connected to their own TMS. And then obviously that brought a lot of data with it as well. So they were one of the few examples of TMSs that weren't just pure software and capabilities, but actually had a network and data behind it. And that's also even been enforced when they started investing also in visibility. They had themselves done an acquisition of a visibility company. They also did in Europe an acquisition of a freight audit company. So again, where they were able to amass a larger amount of data. And so again, that positions them very well. I think for Transporion under that Trimble umbrella, and again, that mixture of focus on assets and the carrier base where they were very known, but then now being a shipper solution, I think that's been a little bit more where the struggle lies.
Yeah, I think, look, if they can, like I said, if they can unlock it, they can figure out how to tap into the carrier network. There's a huge amount of value unlocked that's there that story could play out. I don't think it's still brand, Transporion had some exposure to Russia. I think, something like 15% of its business was actually in Russia, Ukraine, Russia-Ukraine territory. And so the transaction happened around the time of that war. That really probably was served as a distraction as much as anything, as they try to sort of integrate this business into their broader ecosystem. So Bart, let's talk a little bit about AI. The days of really you lived it painfully. The idea of professional services, a lot of these technology companies, visibility is a great example of this, get sucked up in this long implementation cycle. You've got some perspectives on where that's changing. What does that look like going forward?
Yeah, I think technology and the way people want to buy technology today is quite different than what it used to be, right? It used to be all about software capabilities. I mean, it's not that long ago that we bought software. It was a product, right? Even when you bought your Microsoft Windows, it was a disk that you bought in a store. And then we went to cloud, and now we have these AI data-powered solutions. And so it's quite different. And it's not just the product and the technology itself, but it's also how you bring that to the customer. And if you look at customers today, whether they are carriers or they are brokers or they are shippers, everyone is looking at value. How does this impact my bottom line? How does it help me to create more revenue, lower cost, but at the same time create a better cash flow? And it's all about having a technology that, one, I can absorb in my organization, because some of these heavy implementations are very hard to absorb, especially in organizations that have less and less people working in transportation organizations. Secondly, is it the right technology that helps my people, that empowers them, rather than we have a lot of kind of resistance for change, and so people don't want to use this new technology, or they're afraid that it's going to replace them, which is still the case in some use cases with AI. And then also, how do I actually get to that value very quickly? No one is ready to kind of go and do these major investment in these long projects that take 2 to 3 years to even see the first piece of value. So it's all about, how do I have something that I can implement quickly, where I can get the value quickly, and that really help my people do their jobs in a more efficient way. So as I'm progressing, and I know that there's going to be less of the workforce population available, I'm going to be able to help my people to do their job better, help them to do things faster, and at the end of the day as well, like their jobs more, so that we can also help with the attraction and retention of talent.
Yeah, I agree. I can't imagine in this current environment with technology evolving so quickly and AI evolving so quickly, being willing to take on a new implementation of a major tech project that takes multi-years, because in a few years, you'll need something different by the time you're done. What is your advice to a shipper or logistics provider evaluating new technology, looking for a new purchase this year or early next year? What should they be doing?
Yeah, it's really around, one, what's your strategy, right? What is it you're trying to accomplish? And then really find a vendor partner that can help you. And what you should look for is really a solution that is based around data and network that can help generate value very quickly. Because the way they do that is to really take that data and to very quickly make decisions. I think very similar to what you guys do with Sonar, it's not just about having the data, having the insights. How can I turn those insights into decisions very quickly? We live in a world that is changing so fast with things that are coming at us. I mean, we don't even know what's going to happen in next year, let alone in 3 months. So how do I have the proper tools that can digest real-time information, but not leave it at that, but then very quickly can turn that into decisions that are executable? That's what's the power is going to be of the technology, and especially with AI, but it's also what is going to make companies, whether you're a manufacturer or you're retail or even a carrier, the more agile you are and the quicker you can respond to all of those disruptions, call it changes, the more competitive you will be. And the companies, unfortunately, who do not do that and continue to do things the old way based on old technologies, that chasm between the companies who are adopting it and the ones that are not, that chasm is going to be large very, very quickly. And that's a big difference in technology today. 10 years ago, if you didn't invest in a new technology versus you would take that innovation on, you probably would take 2 to 3 years to even see a difference. Now, in a year, you can be, majorly in a discompetitive advantage.
But Bart, I think this is where when we talk about Trimble, it's a $500 million business. I think this is where they have the advantage because they have such broad distribution. And look, you've been around technology for a long time. Is one of the challenges is all this integration of all these different assets and companies they bought. Professional services, they're still dealing with some mainframe customers that are on AS400s, green screen products. The AI speeds that up. It makes data flow easier. It makes communication layers easier. It could tap into what Transporion's built with their marketplace. I actually think the incumbents end up winning. And I know this is a difference in here, but I think the incumbents have some opportunities that actually enable them to win in an AI world that's different than perhaps what we would expect because they're no longer as encumbered with trying to unravel all the spaghetti that is all this legacy technology.
Theoretically, I would agree with that. The fact is that, however, if you look at how companies have invested in technology, they don't buy all the stuff from a single company, right? So they'll have all these systems from different companies, and they still need to integrate between the different companies. So a lot of times it might make more sense to have a separate platform that can go across different vendors. You see, with the exception of maybe SAP, very few companies that have a large footprint with just a single vendor. Even with the Trimble customers, some people might have used the Trimble telematics, right? The PeopleNet product, but then, they might have used their direct competitor for the TMS and they use someone else for, maintenance system. So it's still a disparate system. And then the other part is you have to look also at the age of the architecture and really to take advantage of the data and have access to the data and be able to act on it. Really requires a more modern architecture. And we know that's been some of the downside of some of the divisions within Trimble, that it was built on an older architecture. And that's where I think some of the other companies have an advantage. It's not just having access to the data, but it's also being able to do. And I'll give you a practical example, right? If you have these visibility companies, the idea was always to feed that real-time information back to these big TMS companies. And what did you see is that they really couldn't do anything with that real-time information because their systems weren't built to really use and absorb real-time information and then very quickly execute based on that. It was more built on, we use more these heuristics that plan and then go and execute. But the planning almost stops when we set the plan in motion, and then it isn't able to react to changes very, very quickly.
Yeah, I think you're right about some of that. Even in working with shippers in my prior life, it was shocking how hard it was for them to get any of their data out of their TMS.
But that's where AI, and we're going to debate this on Wednesday at the AI Summit. We'll talk about this. I'll take the other side of it. I think the larger enterprise software companies that have substantial balance sheets, but distribution, like I've been in technology, Bart, you've been in technology a long time, I've been in technology a long time, and distribution is the most important thing. Anyone who's ever launched a business knows that you have to figure out distribution. Trimble has that. They have massive distribution. And these technologies, these AI technologies, bring out the best in data and can make it very easy to go in and mine your database. So it's something to talk about. We'll have to have you back, Art.
Yeah, we'll see.
Unfortunately, we're out of time.
Yeah, I would say just as a final conclusion, I don't think there is a single right answer, right? And that's why we see people use AI use cases with the incumbents, but also with newer vendors out there. It's a combination of, especially in this stage where we're still exploring, no one's doing more than a few percentage of their business using AI. So we're still early on.
It's still very early, but I always bet on the money. Who's got the money and then who's got the distribution? Always in technology.
Thank you, Bart. It's always good to talk to you.
We'll be right back.
Thank you.
We've got Matt Leffler. This is your favorite day of the week, the favorite hour. It is Freight Expectations. We're going to talk about Mesilla Valley. We had a nuclear lawsuit. Stay with us.
In today's supply chain, every mile and every minute matters. Shippers, lessors, and railroads count on performance they can trust. That's where Trinity Rail delivers. With integrated railcar solutions including manufacturing, maintenance, parts, fleet management, and leasing, helping you reduce downtime, optimize your fleet, and stay ahead of demand. Because efficiency isn't a goal, it's a competitive edge. Trinity Rail, built to deliver.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara Driving Coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half. And then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
Well, you've been clamoring for it all week, we know. We have Matt Leffler here. Welcome to Freight Expectations. Matt, I know you've been clamoring to get back on air to talk about all of the news. We had this massive nuclear lawsuit with Mesilla Valley Transportation that was announced. We covered it this morning. $104 million.
Yeah, this is crazy. I mean, this is the nature of the business. It's good to see you, Craig. Great to be back for everybody. But yeah, $104 million verdict. This thing went to trial just a couple weeks ago, got the verdict, just came out, and $104 million in this catastrophic accident, a horrifying case. The death of anyone is always a tragedy. But it just goes to show, if you think you've escaped the big liability verdicts, they're just getting started. Tort reform is necessary, but ultimately, when there's an accident, there's going to be a lot of money exchanging hands.
So Matt, do you think this one gets paid out? Because in some of the nuclear lawsuits that we've covered, they get significantly reduced on appeal, or there's, obviously Mesilla Valley is not going to, they're going to be around, but do we think this gets paid out? Do we think the insurance is going to cover the most of this?
Yeah, I mean, that's a really good question. So we don't know exactly how Mesilla Valley insures the risk that they have. Presumably, they have some level of self-insurance like we saw with some of the other really big motor carriers. But there's going to be an umbrella policy, right? There's always going to be a policy that steps in once you've gone past what you've kept aside for these cases. It's going to be a decision for Mesilla Valley if they're going to appeal. Probably they will, knowing how this is a timeline for when a verdict happens to when you can actually make the appeal. If you don't do it in the timeline, then you lose the right to appeal. But there's certainly going to be some conversation on, do we settle this thing now? It's not like the Werner case where there was clearly no real fault on Werner's side. The jury just got it wrong. This was a truck driver that fell asleep and caused a catastrophic accident, killing someone in the berth of their truck. And so ultimately, there's a real pressure to settle these things and move forward. But we'll have to wait and see. Time will tell, but this is only going to accelerate.
So here's what I don't understand. Okay, so the driver falls asleep. Tragic story, and we all know that. But how is Mesilla Valley? What did the jury determine? What did the plaintiff's attorneys claim that Mesilla Valley itself can be held accountable? Because look, again, falling asleep at the wheel is a tragic thing. We know that drivers have a really tough job out there, but where did the jury get the idea that the company can be blamed for this?
Yeah, so this is how this litigation kind of unfolds. When you are working for somebody, you're an agent of that company. And so the company steps into place of you when it comes to liability you did in the course of your duties. So we call it in Latin respondeat superior, but realistically it's if you work for me as a W-2 and you go off and have some catastrophic thing happen, I'm going to be on the hook for that. Now, this case is interesting because typically you can, when you're hurt on the job, you can only go after your company through workers' compensation. So if the other driver's in the berth and there's some catastrophic thing, usually your avenue for recovery is through going through the workers' compensation program. However, what ends up happening in this case is one of the claims that's part of this is a child who lost his father. So the child loses the father. The child has a claim against the driver, which ultimately goes back to the company. This is why we have this massive trend we've seen over the last several decades of using independent contractors or using brokers, because even if the company did everything quote unquote right, if your agent does something negligent, you're gonna be on the hook for that. So that's exactly how the big company like Mesilla Valley gets brought in when a truck driver who is their employee falls asleep. This is part of the pressure why people say, how can I reduce my potential liability with independent contractors and brokers and agents and all of this? That is what that's the thinking behind a lot of these decisions. So yeah, that's exactly how you get Mesilla Valley on the hook for this catastrophic accident.
I mean, the driver that was killed was in the sleeper berth. It was a driver that was aware, he's an employee. He's aware of the risk he takes as a truck driver. This wasn't a car on the road, because a lot of these nuclear lawsuits have been innocent, we'll call them innocent bystanders, and you can argue the level of innocence or whatever, but effectively, when we've seen the other big nuclear cases, driver was asleep, the truck was asleep, somebody plows into it, or that was the Werner case, or truck's on the side of the road and somebody runs into it, or something. But this is a case where a truck driver was a co-truck driver, a team driver was in the truck. To your point, Workman's Comp should have dealt with this. This is a very unusual case. Why do you think that the plaintiffs awarded the level that they did to really punish and hammer the company?
Yeah, I mean, this is the story that we keep seeing repeated over and over and over again. When you go in front of a jury and you have something like a loss of life, the story is not this was a bad day for this truck driver, this was a bad day for the plaintiffs. No, this was a company that had followed a process and pattern that made them unsafe. And we look at the company and say, this wasn't like this kid who died or this parent who died or whatever. This is you. This is your family. We try to relate it back. They call it the lizard kind of mindset of the reptile theory that plaintiffs talk about. But it's to say, look, this is your family. This is your livelihood. This could have been you. And so juries are getting more and more, I wouldn't say hostile, but they've always been kind of skeptical of trucking companies. And if you say, well, this truck driver was asleep and that accident took place, the other driver, who is the person in the berth, generally their ability to recover for themselves personally is through workers' compensation. But they're the dependents, so people who were dependent upon that person, they can sue separately, and those claims cannot be adjudicated in workers' compensation. Those claims have to go through the court system. So there certainly could be an appeal. There could be some ways to try to bring this number down. But these are the headlines that everybody sees, every insurance company sees, and now every single broker sees. And they realize, oh, there but for the grace of God go I, where $100 million verdict could come knocking on my door. Mesilla Valley, again, wonderful motor carrier, very big company, probably able to survive a case like this. But how many could they survive? Hard to say, but that is exactly what's happening in these cases.
Yeah, I mean, you're talking $104 million, and just even a company that's probably doing around $250 million in revenue, which is, again, I'm approximation based on how many trucks they have, maybe 300 million. Even if they're one of the top and most profitable motor carriers and say they're running a 90 OR, that's $30 million of operating profit before they service their working capital debt. It feels very, this feels like it's going to take years. Now, insurance is going to step in. That's the important thing, but we don't know what the insurance levels that Mesilla Valley, how protected they are. But it's still, it's a catastrophic situation for the company. And I still trying to get my head around, again, I'm not dismissing the fact that the driver lost his life. I'm not dismissing the pain and suffering of his family. To your point, his son sued and was awarded. But I'm struggling to understand why a jury would feel like, of all the different, and again, every case is different, and it really is up to the plaintiff, and you get luck of the draw when you get a jury. But I still am trying to understand what is the justification for such a large award that just is not clear to me right now.
Yeah, this is one of the questions we continually ask ourselves in the law is, we know what your medical damages are, right? We know what the hospital bill was. We know what the ambulance bill was. We know what the pain and suffering might have been. We know the physical therapy. When someone dies, it's a little bit different. But there's things you can hold on to and say, well, this is an actual thing that happened that you paid for. Therefore, we should reimburse you if you're found to be liable. But when it comes to damages like this, especially punitive damages, juries are kind of at their own leisure to kind of decide what they want to decide. And that means what they watch on television. They see these big numbers, they see these big headlines, and they think every human life has this super huge value. And again, every life does have value. And we necessarily know we want to get home in the same condition that we left. But there is really no benchmark that says this is how much someone is set to recover in these types of accidents. You might get a bunch of people across the country say, here's all the verdicts that have been awarded, here's all the different things, but really it's in that jury. And so when we talk about things like tort reform, it is when the legislature comes in and says, we are going to disrupt what the jurors are doing. We're going to say that in certain cases, the numbers of punitive damages, for example, are going to be capped at a multiple of the compensatory or some other metric. But that is what we see, this increasing pressure when these verdicts get so high. Because to your point, Mesilla Valley likely has some level of self-insurance, clearly has an umbrella policy. Most large trucking companies run this way. Small ones can't. What they do is they just go bankrupt and start another trucking company. So it ends up incentivizing a lot more small motor carriers because the big guys can only take a handful of these things per year. And that's why there's been such pressure to have additional regulation, but you can't really do it at the federal level. It's really a state by state process. And so you're at the whims of the state legislatures. These numbers are going to continue to accelerate. We have seen this in the U.S. Chamber of Commerce, the American Trucking Associations have all shown us that over the last 5 or 6 years, the rate of verdicts increasing is 400 or 500% in terms of total dollars given back. So it's a big thing that's happening, and there's not a lot being done to stop it.
You know, Matt, I'm looking here at the data on Mesilla Valley inside of search carriers, which is inside of Sonar. It's bigger than what we reported, 2,650 trucks. So it's actually twice the size of what the original report was. But I'm looking here at the safety information. It's a very safe motor carrier in terms of its ratings. Its drivers out of service. This is not a case where the company has been irresponsible, at least in the data. This is not a case where the company's had a reckless level of problems in terms of maintenance. But let me read this to you because I think it's interesting. Is the out of service rate for drivers is 1%. Which you and I have reported on this. That's a very low number for out of service. It is an example of a high quality motor carrier just on that one data point alone. Its vehicle out of service is 12.9. That may sound like a big number, but for those that tune in, we know the vehicle out of service, Matt likes to talk about this, is as high as 22 to 24% on average across the industry. When I look at the average age of the trucks, they're doing 200 million miles a year, according to the MCS 150, is just something they provide the FMCSA. That's 2,600 trucks. Average truck age is 4 years. Again, when I read the profile of Mesilla Valley, I know it to be a high quality carrier. But when I read it in the system, there's no indication, at least based on this, that the company needs to, we should punish them, that there should be this punitive vitriol that these juries are going after it. I don't get it. I just don't understand it. And I understand how this works. You get a real aggressive plaintiff's attorney in a courtroom, and I think this was in El Paso, Texas. You get a lot of sympathy. El Paso is a relatively poor city in America. It's actually a huge city. By the way, I think El Paso is one of the coolest cities in America. If you haven't been there, because it's the blend between Texas culture and really a lot of Mexican culture, like sort of immersed along the border. It's a relatively poor city, beautiful mountains, absolutely gorgeous. Everyone should go to the Sun Bowl. It's probably the most beautiful stadium in America. Anyways, I imagine the way this works is you get a jury, like you said, that doesn't like truckers. They see it on the road. We've all had a bad experience or two with truckers on the road, on the highway. It happens, and they just decide to hammer them. And the problem with this is there's no evidence. We cover all this travesty that goes across our industry, and there's a lot of other businesses that should absolutely get the hammer, and bad actors. I don't get it. I'm struggling with this one.
Yeah, I mean, to build off of that, so Mesilla Valley, what their specialty is the cross-border freight. So moving things between Mexico and the United States, that requires trailers that are really well maintained, really generally newer trailers, because you're bringing expensive appliances or expensive components across the border. So border crossing motor carriers tend to be really well maintained. They tend to have really good operations ultimately. And a 12% out of service rate, I mean, again, for all the listeners and the viewers out there, the national out of service rate for commercial vehicles is 22%. So 1 in 5 trucks on the road right now, unsafe at any speed. So Mesilla Valley is above the rest. They are doing a great job ultimately. But when you start to peel back the onion, it's any given day in the courtroom. And when you have a story of a truck driver who is distracted, because tired driving is distracted driving. So if you're tired and you're driving and something catastrophic happens, it is oftentimes about sending a message back to the regulators, a message back to Congress, a message back to the operator of the trucking company. You could have done more. You should have done more. Maybe there should have been driver-facing cameras. I don't know any of the underlying facts about what technology was inside that truck, but when you have very skilled plaintiff attorneys, and I want to be very clear, plaintiff attorneys that are in these truck crash cases, they get usually 1/3 of the recovery. So you're talking tens of millions of dollars. They understand how to tell the story of these cases. And when you have these types of cases, high profile cases, the plaintiff attorney will do, in most cases, 4 or 5, maybe more mock trials. Well, they'll actually do the entire trial with a group of people to get the best story and see what really influences the jurors or the pretend jurors for the mock trials. And the defense attorneys don't have that luxury. They may do 1 or 2 mock trials, but nowhere near the same level of the plaintiff's attorneys. So it's really asymmetric warfare when you talk about plaintiff attorneys and defense attorneys in these cases. So unless there's some big potential way to reduce those punitive damages, the verdict probably stands and Mesilla Valley probably pays out and then makes some changes going forward. But this is the story that we continue to see every single day. These cases are happening more and more frequently. They're going after the leasing companies and they're going after the motor carriers and the brokers.
You know, Matt, it does strike me, you mentioned the cross-border freight. The fact that it is cross-border means that their trucks and trailers and drivers are being, inspected. Particularly the trailers are being inspected. The trucks really aren't going across the border much because they're probably using a cross-border dray operator. But certainly the trailers are going across the border all the time, so they've got to maintain the equipment. I want to read the list of shippers according to our data on who their customers are. And look, these are not some fly-by-night organizations. It's Lowe's, it's 3M, it's Electrolux, Home Depot, Freeport-McMoRan, King Soopers, I don't know what that is, Marshalls, Anheuser-Busch, Red Bull, Electrolux, Tesla. Like, these are companies that are hiring only the best. Like, that is the customer list for Mesilla Valley. Again, completely struggling with this. Of all the stories we talk about, that we tell, go ahead.
Yeah, it really does remind me of the Werner case with Home Depot, right? So Home Depot, it gets sued because there's an accident with the Werner Enterprises, and Werner ultimately, whatever that happens with them, but Home Depot is dismissed from the Texas Supreme Court saying, no, you didn't do anything wrong. You went with a very sophisticated motor carrier. And that's why those big brands go directly to motor carriers like Mesilla Valley. They do everything they can to do it right. Now, one bad day where a driver falls asleep does not destroy the value of the underlying company. It's a difficult thing to deal with for sure, and it's going to have long ramifications over time. But it goes to show that if you are an enterprise shipper, you're either going to use a broker, some sort of 3PL, or you're going to use a motor carrier that has the experience and the wherewithal to handle really complex freight with very difficult constraints. I mean, cross-border is difficult work. And to your point, those trailers, they're going everywhere and they're well maintained. And that's the out-of-service rate speaks to the fact that they know how to maintain their equipment. So we'll see how this goes out. But yeah, the numbers, they don't surprise me anymore. That these numbers continue to rise every single year.
Yeah, I mean, look, this does, again, you talked about the fact that this is a hiring, there's an employee, there's a potential workman's comp issue that got turned into a nuclear lawsuit due to the driver falling asleep. And then look, tragic all around. That's a tragedy, and someone's life was lost, multiple people's lives were lost. The problem that I have is just the fact that this is not a situation that, from where I sit, that there needs to be a punitive, let's punish, let's hammer this company because they did something egregious. Driver fell asleep. It happens. You're working long hours. I get it, but you sign up for that as a truck driver.
Yeah, I mean, this is the fundamental question of, we have all these hours of service regulations. We are always hammering home. We want drivers that are professional and qualified and know that if they're too tired to drive, they would say, I'm too tired to drive. I don't know the details of the facts of this specific case that the driver had reported being tired previously. I don't know that. But I do know that we expect a higher standard from our truck drivers, and the motoring public has seen these cases. We see them all over the news every single day of drivers that aren't qualified being involved in accidents. Now, the vast majority of accidents that happen with trucks and trailers today are not caused by the trucks and trailers. They're caused by the four-wheelers who just don't understand blind spots or don't give the braking distance for the big trucks. But when you have these cases, when you have what really is a clear-cut case of a driver falls asleep and causes damages. We know how this story ends up going. And what I would emphasize for everyone who's like listening, has never experienced a trial or knows what that kind of feels like, I'll give you a quick anecdote. I know a great plaintiff's attorney who used to be a military pilot, and he had when in his time in the military, his plane malfunctioned and he had to eject. And the plane was $50 million and it crashed. And he went to his supervisor, his commanding officer, like, "I'm so sorry." And the commanding officer said, "Look, your life is worth more than that plane. Your life is worth more than $50 million plane." And that plaintiff attorney will then go to trials and talk to juries and say, "I think that my client's life or their person who they lost is just as valuable as a military fighter jet pilot." This is what happens. That's why it's you pull on these strings and people start getting persuaded.
Yeah, it's a crazy story or an interesting story that we're going to continue to talk about this. But coming up next, we're going to talk about this EPA regulation, what it means for maintenance. There's a person here to tell you all about it. It's Matt Loeffler. He is the maintenance and legal expert in freight. Stay with us.
Race car drivers like NASCAR champion Jesse Love are a lot like commercial drivers, pros. But even the best in the world still watch the tape to see what they missed and get better next time. So we created the Samsara driving coach.
Great race, Jesse, but you were following too closely and you were speeding.
Okay, you got me on that one.
Samsara uses insights from millions of professional drivers to coach drivers in real time.
Because even champions need a coach.
Give me the keys.
What's the masterclass all about? Well, here's what I'm going to tell you. If you're a driver, you're an owner-operator, you're a fleet owner, whether you're in compliance services, dispatcher, no matter what it is, masterclass is for you. Every 2 weeks, you're going to sit down with me and we're going to go over certain business topics that are related specifically to your small trucking company operations. We're going to help you with everything from compliance to how to negotiate better on the spot board, how to find direct freight, and everything in between. This is the reason why you don't want to miss out on Masterclass. It's about an hour to an hour and a half, and then on top of that, you'll have the library to you so that way you can always research and reflect back onto it. Don't miss out this opportunity. This is built specifically for you. I'm excited, and I hope to see you in class.
Imagine a world where your freight moves as fast as a digital pulse. What if your visibility didn't just tell you where a truck was, but exactly where it needed to be 48 hours from now? Think of a logistics network that corrects its own mistakes before they cost you a single dime. What if your supply chain could think for itself? Imagine AI agents negotiating rates in milliseconds, predictive models that solve labor shortages before they even happen. This isn't science fiction, it's the agenda. On July 15th at the historic Old Post Office in Chicago, FreightWaves presents the Supply Chain AI Symposium. We are defining in real time how AI is embedded into every mile, every warehouse, and every handshake. Because in 2026, the future isn't just coming, it's already negotiating. The FreightWaves Supply Chain AI Symposium. Secure your spot now.
By the way, if you're curious where I got Mesilla Valley's customer list, that comes from our Sonar instance, our Search Carriers instance iframe inside of Sonar. You can get that. All subscribers have access to it. You can see whom, pull up a carrier and see whom is showing up in the inspection data as their shippers. It gives you a really good idea on who they're doing business with, what companies they're doing business with. It's a fantastic tool. I highly recommend it. Matt, the EPA regulations have been something that have been talked a lot about. The last time we saw big NOx regulations was in 2004. was new guidance in 2007, although 2007, there was a lot going on that finally came out in 2010. It's the first time we've had big change in emissions regulations in 17 years. This is going into effect next year. One of the big things that always happens when you have big new engine regulations is just how hard it is to find. There's always these maintenance issues which pop up. But the EPA's guidance kept the Biden requirements on NOx, made some modifications to things like warranties and other provisions that were in the original rule. What is your sort of thoughts on this?
I mean, this is a fascinating conversation about emission standards for big, heavy trucks. So in terms of out of service, what happens to a truck when something breaks down? Usually it's brakes, lights, and tires. Those are the typical things. BLTs, very delicious to eat, not great for a truck or a trailer. But when the emission standards began to roll out, new components were added to the trucks. And this stuff is fascinating. So to kind of break it down, like in terms of like what is happening with these motors, there is hydrocarbons that's still in the emissions that come out of a truck. So how do you capture those hydrocarbons and bring them back into the vehicle? Well, you have to circulate them back. Unfortunately, they're just too hot. So you got to cool them down. So you cool down the exhaust fumes, then you add some new things like urea or DEF, diesel exhaust fluid, and that helps you combust more of those hydrocarbons. All of those great things that make it ultimately a cleaner burning motor is new maintenance components that have to be serviced, repaired, and dealt with. And these diesel particulate filters, like this, the filter itself can be $2,000 or $3,000. And so one of the most common complaints when these emission standards rolled out is my motor is slowing me down. It's derating me. It's making it so that I have to go only 5 miles an hour. And so people were getting towed with the emission systems. And this has been one of the most expensive changes in trucking in a very long time. The last decade or so, we've watched these emission systems continually get more complex and require significantly more maintenance. So the EPA is trying to roll back some of these requirements on NOx, getting that so that when the numbers start getting high, you're not going to turn the truck off. You're not going to derate it entirely. And there's a comment period. So this thing was just announced yesterday, and there's 45 days for public to comment. And that ultimately, I think we're going to see that the NOx ratings are going to be reduced. And so you'll hopefully see less unplanned maintenance around these after treatment systems. But my goodness, it has been a really interesting problem that mechanics have had to deal with for many, many years. And fleet operators continually get frustrated by what is happening with diesel exhaust systems.
Well, I mean, look, I think reducing NOx is really the thing that I think was surprising if you sort of follow the Trump administration's, deregulation of environmental regulation. I think a year ago, the EPA administrator said it was the greatest bill ever, or something to that effect, the greatest deregulation effort in history. It was some big, bold claim that he had made about this desire to deregulate. But the fact that the Trump administration kept these NOx limitations to reduce 90% of the particulate matter that comes out of heavy-duty trucks is really interesting, because I think if you sort of you read and you hear about the Trump administration's change in environmental rules, you would assume that they would have completely thrown the book out and said, we're not going to implement these rules. But it's not the case at all. But so there is going to be a big change. I mean, the increased cost to a new truck is anywhere from $8,000 to $25,000, according to our analyst. That's a big change on a per truck basis. Why do you think the administration kept the rule, at least the reduction? I mean, they we'll call it softened some of the other regulations or pulled back some of the other more aggressive parts of the bill. But why do you think they kept the 90% in?
I think when you start looking at like emission standards, you kind of defer to what other groups have done previously. And the big OEMs, the big leasing companies aren't, shaking in their boots on new regulations on this particular thing. Now, the push for all electric vehicles and all of that, like zero emission vehicles, that's been completely dismantled by the Trump administration. But what you see with these type of regulations is incremental modifications. And I think the EPA said that they expect about $12 billion, that's billion with a B, in savings for the American consumer by reducing these regulations a little bit, giving some help to American consumers. And for the truck drivers out there, these systems promise a lot of great things. And we all want to have our air to be clean and we want our water to be safe to drink. But the regulations can be overburdensome and cost prohibitive. And that's, I think, one of the challenges we see happen, where the technology can offer something, but the medicine to continue to use it becomes, cost prohibitive. So it's good to see the EPA coming out and saying, hey, the Biden administration went too far, we're going to bring it back, but it's ultimately not going to remove these things. But it's also worth everyone remembering that a truck today versus a truck, let's say 20 years ago, it's like 40-1 how much more efficient they are today than they were 20 some odd years ago. So we do have a lot of great innovation in the transportation industry, and we don't need necessarily big regulations that make it cost prohibitive to keep your trucks running.
Well, earlier today when Julie was here, we were talking about the fact that I lived over in Hong Kong, went to school over there for a bit, and just how dirty the air was. And you would walk down the street and you would get to the dorm. I was in there in school, and like you would have black soot on your face. And this was 1999. It was right after the changeover, the handover to China. But then if you went to mainland China, it was a lot worse. But it was just, I remember walking around and smelling the buses because they were breathing black soot diesel. And, that created a lot of smog problems and a lot of air problems. And look, I'm not by any stretch, anyone would accuse me of being an environmentalist. But I do think if you've ever been in unregulated air, unregulated water, as you say, you sort of appreciate the fact that there is some level of environmental regulations. This NIMBYism that we've talked about frequently that's really hurt American progress and growth of building things like new energy plants, new power plants, things like that. And natural gas has gone way too far. But when it comes to air, I think it's interesting that the Trump administration has kept the 90% reduction in NOx in this thing, because NOx is a big source of pollution. It's a big source of smog. It's a big source of asthma. It is known to cause cancer, and I think it's a regulation that I think should be welcome. It is more expensive. It will cost American truckers more money to buy trucks, but look, that's the trade-off of cleaner air.
Yeah, I mean, this is the fundamental question: is what do you want to have for your kids and your grandchildren, and that is to have trucks that are well maintained, technologies that are keeping things cleaner and safer. And the DEF system, the whole ability to take hydrocarbons from the exhaust, cool them down, put them back into the engine and blow them up again to preserve some of the hydrocarbons, but also reduce some of the emissions, is phenomenally interesting technology. And what we want to see happen is that technology that gets deployed is something that's scalable and something that can be serviced easily and doesn't make things too expensive. Like, just to give a simple example, electric vehicles generally cost 2, maybe 3 times more than a diesel counterpart. So we're not going away from diesel anytime soon. That is the dominant method of moving things across this country. And ultimately, when you have the aftertreatment systems, the more and more rigorous the EPA regulations become, the more prohibitively expensive it is for new entrances and for just motor carriers in general to maintain those systems. So this is, we're going to watch the comment period. 45 days from now, we'll see what ends up being the new regulation. But it is fascinating to see the administration tackling this type of regulation, not the really big overt stuff, but the how much percentage can we have in the air? When should the sensor tip you off? When should it derate the engine? These are all things that are going to be hopefully decided relatively soon, and it'll be a more efficient supply chain for it.
So Matt, what else is on your radar this week? I know you've been doing some traveling lately. This show is keeping me busy along with other projects. Running businesses and doing a 2-hour show every day is a lot.
You're a busy man. You're a busy man.
My powers that be to get a raise here, because it is taking a lot of time. What exactly are you looking at in terms of what's on your radar?
Yeah, so just a couple hours ago, we broke a story on FreightWaves. You can find it online about a new type of fraud impacting the trucking industry. This is something that I had no idea about, but Craig, it's about trailers. It's about trailers.
Oh, your favorite.
My absolute favorite, the best asset class in the industry is a trailer. I also like spotting trucks, but I really like trailers. But here's what the story is. People are using Facebook to advertise fraudulent trailers that truckers can rent. The truckers are then going and communicating with those different people through WhatsApp or Facebook Messenger, or whatever. They're making a deal on a specific trailer. The trucker then wires over the money or Zells them or sends them money somehow. And then the trucker goes to pick up the trailer at the location that the leasing company told them it's at. And maybe that trailer is there, but they have no authority to give that trailer away. It's already leased to somebody else. So truckers are showing up to different places, grabbing a trailer they just rented. They spent a bunch of money to rent, and finding out later on the trailer is actually stolen. They don't have the right to take it, and their money they've put out is already gone. It's impacting the trailer leasing companies. It's impacting the brokerages that also have their own fleets of trailers. And what we're finding is that even like our friends at Genlogs, they're seeing an uptick trying to locate trailers that are being stolen. So when they came for the Alp stuff for Tucker, I didn't say anything. When Guy Fieri got his tequila stolen, I didn't say anything. But here's the thing, Craig, when they come for trailers, when you come for trailers, I gotta say something. I can't sit idly by.
No, it's new types of fraud. There's one thing about this, we have talked about this, the fact that if you go look at the FreightWaves Today show and you look at almost every episode, we do the 3 top stories that are on FreightWaves.com. We cover them every single opening. It's what the Morning Minute is based on. It's all programmatic in terms of the top stories. That's what the story selection that we pick. If anyone's curious why we pick those particular stories, because those are the ones that are trending on the website. It's like, I think 2 out of 3, almost every single day is some type of crime. It's some type of fraud. They say it leads, but that's exactly what we're talking about here, is a new emerging threat in terms of a scam, and this industry is just so prone to it.
Yeah, what it sounds like is happening is there is somebody whose boots on the ground finds a trailer in a given place and then tries to find someone to rent that trailer, even that knowing that they put their eyes on it. So there's somebody who's locally looking at these assets, communicating through the different social media platforms to try to rent the asset, and then the truckers end up getting in trouble. You don't rent through WhatsApp. Don't do it that way. Use domains. Talk to people. There's a lot of ways you can combat this type of fraud. What I do think is interesting, Craig, is I reached out to some of our friends at the FMCSA, and while this isn't like their purview of the fraud of equipment, it's a thing that they had not heard much about. So we are now seeing the government start looking into this issue. The big leasing companies have been somewhat familiar with it, but it is certainly rising. It could very well be that the same cartels that are doing the fraud and the theft on the cargo side and freight side may also be bleeding over to the equipment side. And we know for a fact that there's a lot of trailers out there, about 5 million trailers in the US, and about 12 to 14% of those are owned by leasing companies. So truckers like trailers. We all love trailers. And this is a new type of fraud we're seeing kind of develop over the last couple of months. And I'm sure it's been going on for a while, but it's good to kind of finally dig into it and learn a little bit more about it. And my goodness, I was surprised, Craig. I was surprised.
Well, look, Premier Trailer Rental is there for you if you need it. Sponsor of FreightWaves Today. They would love to help you out, and they have legitimate trailers. Also, Repower, a company that I'm on the board of, has a trailer marketplace, and they vet the trailers. The participants, like you said, don't go to WhatsApp, don't go to Facebook. You would not. I mean, it would be like posting freight on one of these like social media thing and expecting you're not going to get ripped off. It's just foolish.
Absolutely. If the deal seems too good to be true, it absolutely is. Talk to someone. You said about Premier. 48 locations, I think 42 locations, 42 locations, secured yards. For a trucker, that's what you want to expect. You need a secured place to pick up the asset. You want stuff that's on the paper of the company, like the location you're going to should be the same location of the company you're trying to rent from. And when it comes to Repower, they do a good job vetting their different participants. So there are ways for truckers to get access to trailers. It is not through WhatsApp and it's not through Facebook, at least for now.
Yeah, and the problem with these emerging crimes is that oftentimes, because they haven't been seen before, these organized crime criminals are figured out how to exploit something. And it only takes one, as we've talked, every day we're talking about these types of crimes, is you really only have to be right once if you're a criminal, where to defend yourself, you've got to be right 100% of the time. And that's the issue that a lot of this is contending with. And I don't think the authorities, we've talked about Korka, we've had IANA on this week, we had AAR on this week, we've had the Air Forwarders Association. Everybody's really focused on Korka. We know you're passionate about Korka.
Absolutely.
It's moving too slow, Matt. What's it going to take to get that through Congress?
I mean, honestly, I think you just need to get, it passed the House, it's in the Senate. There's some things going on in the Senate right now. There's stories percolating. The hope is we have to keep talking about it. We have to keep the momentum. We have to keep telling people that this is the act that is one we all have to support. It blows my mind that the Democrats and the Republicans have not jumped on this and said, hey, here's true bipartisan stuff we can do, though it's an election year. So do you really want to do anything bipartisan? I don't know. I hope that they would, but you never know. That's the best thing we have. We
did have a bipartisan housing bill that really the president has not signed. Like, that's the insanity of all of this, is like, it's unfortunate because now it's all just politics.
It has always been politics, Craig. I mean, I think I've become more cynical as I've gotten older. President has said he doesn't want to pass anything until after he gets the voting piece kind of squared away. There's a lot of interesting things happening with the elections generally. I'll stay away from that for now. But we have to have a government that's accountable to us. We're the most powerful generations ever lived. Our government listens to us in ways they haven't before. But Korka doesn't get people excited as much as other things. And I wish that our government would listen, at least for what our constituents keep talking about, which is we want our stuff to arrive in the same condition that it was supposed to arrive. And if things keep getting stolen and there's no concerted effort on a federal level to investigate these things, can we expect anything different from happening? I mean, ultimately, private companies cannot compete with criminal cartels that are global. It's just they're not designed to do that. They can help, but we need government action. And that's the best thing we have in front of us. And the Senate is asleep at the wheel for right now.
And the problem is there's so much money. Like, that's the issue. And it's really we've talked about this ad nauseum, is that the FBI, it's really the purview of the FBI, particularly when you're talking about international crime. And a lot of this stuff, as we know, is being perpetrated internationally in these organized crime syndicates. We did a story not too long ago about semiconductors being stolen. These are NVIDIA chips that are illegal to sell to China, but state-sponsored criminals or organized crime working with state sponsors are basically stealing the semiconductor, it's pallets, it's not truckloads, but pallets, and exporting them out of the United States. And that's a significant problem, that when you have organized crime and you have an underfunded or no funding, relatively, level in law enforcement and very little coordination among different agencies, which is really what you need, you're going to have this problem. And then, look, we solved this with the post-September 11 anti-terrorism with the Patriot Act and really the funding and cross-coordination between government agencies. Because if you remember, during September 11, the FBI and the NSA and the Department of Defense and the CIA all had different pieces of information, but they weren't sharing interagency, and therefore the whole picture wasn't put together. Had that had happened before September 11, it is likely that we would not have had those attacks. And you can't blame the government, but that was what this cross-pollination is meant to serve, is to ensure. And look, the track record of the federal government for all the things that we've sort of knocked it in terms of post-September 11 security, domestic security, is actually pretty remarkable. We haven't had a major terrorist incident, but a lot of that is because of the post-September 11 implementation of cross-pollination and databases that were sharing information between agencies. And that's what you need for these types of crimes, because whether it's the Department of Transportation, the FMCSA, local law enforcement, the retail industry, the railroads, the air freight forwarders, the truckers. We all got to work together. And that information is not flowing, and there is no agency that has the funding to go after these bad actors and these organized crime syndicates.
The most effective way I think we can get this message out is for trucking companies or shippers or brokers who have been victims of this kind of fraudulent activity, having your cargo stolen. They need to take those specific cases to their members in the Senate, whether it's just a letter or an email or a tweet, whatever. These people, the men and women in the Senate, they listen to their constituents. Now, trucking is important. It's a thing I care deeply about. The rest of the country maybe doesn't care at the same degree that you and I do. But those members of the Senate will listen to you. If you say, I'm a constituent, I've been a victim of a crime, here's what happened, here's the solution. That is one of the ways our associations like the TIA or IANA or ATA can also help their constituents out. We see the pictures posted online. I went to Washington. I met my representative. We took a picture. That doesn't do anything. It doesn't do anything. What does do things is you tell your members of the Senate and say, you do something about this issue or I'm going to vote against you. I'm going to get you out of here. You need people that are accountable, that take the will of the people and move it forward. And again, Cork had 160 co-sponsors. This is a beautiful bill that every part of our industry supports. So it doesn't make any sense we continue to let it just sit and stagnate, and maybe it gets forgotten as we get closer to the election time. But my goodness, this is an opportunity for the Senate to do its job, which would be amazing. I would deeply appreciate that.
Look, we need laws passed. Speaking of laws that have not gotten anywhere, in terms of, and there was a Senate version, there was a House version. The president talked about it during the State of the Union address back in January, which is Delilah's Law. Mm-hmm. That's also not gone anywhere. Matt, what is the latest?
So Delilah's Law, this is interesting. So I love Marcus Coleman. I met Delilah. She's a very sweet girl. I'd say Delilah's Law is a codification. And what I want to explain this briefly. A codification is when you take a regulation or some other court thing, some other law, and you make it into a statute that goes through the Congress and gets signed by the president. So the English language proficiency, the non-domiciled CDL, those are the two big parts of Delilah's Law. They're already the law right now. They're already the law. The piece about foreign dispatch, banning foreign dispatches, other pieces to Delilah's Law, I think are again, very interesting. Those don't get the same kind of momentum. And so you still see members of Congress, they've gotten their pictures, they've gotten their social media posts. They already know these regulations are in place by the FMCSA. And so they're really not motivated to do anything major. I think that they ought to do something, but this particular bill isn't going to be something that's going to get them elected or get them more money. So they're probably not as concerned about it. Now, I could be 100% wrong, but that's how I currently kind of view the Delilah's Law. It got a little bit above its skis with adding new things to it. And I think a lot of members of Congress are like, well, I already commented publicly about it. I voted on something about it, and I'm moving on to something more interesting. And that's what I fear has happened.
It's unfortunate we're in an election season. This is the midterms, and it's always, this time of year, you get very little done.
Isn't that depressing, though, Craig? It's like you're in election season, and we're all like, yeah, nothing's going to get done. That's so
everyone, the people that can actually do something about it are positioning themselves on things that they know is sort of, gets the voter to show up, either through outrage, because you hate the other guy running or girl running, or because you want to protect your, whatever your position is. That's the unfortunate reality is that you have these laws. Again, Corka's not a sexy law if you are running, because if you're a congressperson trying to explain that to the public, it just doesn't feel like, oh, that's as fun as blocking a data center or some AI law that you got to contend with. Those are the things that are sort of meat and potatoes these days. The defense bill, we have the defense bill that's also in Congress. That probably does end up getting some support because America loves funding our military, and we will increase that budget. And so I suspect that probably gets passed well before some of these other things like Corka.
Well, I would vote for you, Craig. If you want to throw your hat in the ring, I'll support you. I'll support you.
I am here to support the freight industry. I am a single issue voter and supporter here at FreightWaves Today. Another great show with Matt Leffler. Freight Expectations is available to you on demand. You can get it on YouTube, you can get it on a podcast player, and you can listen to it on SiriusXM Road Dog Network, along with all the FreightWaves Today shows. Tune in every single Monday through Friday from noon to 2, where we break down the weekly news and the thought leaders across our industry. See you on Monday.